Good morning and welcome to the Saxo Bank Morning Call. It is Thursday, June 27th, 2019, and we have a session yesterday. Early this week, we had that biggest down day in quite some time in the equity markets yesterday. A bit of an odd session as we had this missed tweet, I guess you could call it, from CNBC with suggesting Mnuchin was out saying that they were 90% complete with the deal with China. This was apparently a reference to the past negotiation round. But nonetheless, somehow the markets, after going back down, came back up, hoping apparently that this G20 meeting will produce a friendlier basis or relationship between China's Xi and U.S. President Trump. I've got a chart here. Not a lot of new information. We didn't quite manage to scrape back to the peak on that rally cycle. We've come back a little bit, but nothing threatening just yet. Kim, I noticed we have this in the S&P. We did actually just scrape to that new high, but we've come back a little bit there. Any thoughts here, technically, on whether we're going to continue to march higher here?
Well, I think we're a little bit in a limbo at the moment. It seems like it. As I don't know if we have the chart with us, but yeah, here we can see. I actually drawn these two horizontal lines here, 29.17 and 28.74. That is the kind of I would call bull bear area, as I called, where it's testing the upper one a little bit yesterday. It's bouncing off this morning, I believe. So
yeah, we're up to the futures up 12 points.
Yeah, exactly.
Last I checked before.
Yeah, so we bounced off a little bit. This is the CAS index, by the way. So it seems like if we drop back below there, then I will be very cautious about going long again until we're back up. Yeah, but it looks like they got a little bit shy, very close to the previous high. But if we start working our way up above that, well, then we are on the way to to maybe 3,000 even. I think we'll see those stories coming out.
Well, then percentage-wise, that's not.
It's not much. Yeah. It's not much.
And then on the DAX, we have that clear resistance line we've talked about in previous broadcasts, the 12,500 area, a little bit below that actually, but
yeah, 12,430.
Really, I guess.
Yeah. We have this. It seems like we're trading this rising, short-term rising channel here, and that is the key level to break 12,430. Give it a couple of days and we are a little bit wiser, maybe in the week.
Certainly, I need to see what happens this weekend with
Absolutely,
this meeting.
Yes.
And then yesterday we saw a ridiculous bit of weekly data out of the U.S. Oil market with the inventory report.
Yeah, the market was looking for a drop for the second week in a row, and we definitely did get it, more than 12 million barrels. Take a look at the chart here. We did see the market just briefly touch $60 on WTI. What was also interesting out of yesterday's numbers was the net import of U.S. crude oil and products. That actually became a net export only for the third time in history. So and by quite a long mile, and that was due to another increase in exports. So U.S. really is a major force now in the global energy market. And it's quite interesting just ahead of the OPEC meeting, July 1st and 2nd, what they're going to do with this flood of oil coming from the U.S.
They're not holding a lot of leverage clearly with those kinds of numbers over the U.S.
Not at this stage, and just to highlight that, I think the 60 level is pretty key here on WTI, and just above that the 61.8% retracement, around 60.50. So that is the band of resistance for now, and I think we most certainly need to get on the other side of the G20 meeting before we see any renewed attempt at those levels.
All right. Also in commodities, and basically money as well, because a lot of it impinges on monetary policy. The gold price, Kim, we've reached the top here. We saw a nice classic shooting star sort of reversal recently. Some pretty clear retracement targets, I suppose.
Yeah, we have this top and reversal pattern. First, kind of you should say, a shooting star, and then this bearish engulfing. I have taken the gold future instead of what we normally talk about, which is the spot, yeah. Because this picture is much more clear. It's not to say that, well, it's all over and now we just will see downhill from here. I think we will see a minor correction, 1375, which is the 38.2 retracement. Maybe not much.
It's also a very clear support line from a previous high.
Exactly, and that's not. Yeah, that's resistance line has now turned into a support line. So maybe a little bit drop down there before we start moving up again.
We're trading around the 1400 level. Sometimes those round numbers can be psychological and sticky as well.
Sticky, yeah.
And again, just like oil, G20, basically that the outcome of that meeting holds the cards.
And incoming U.S. data, and whether the Fed expectations have overshot temporarily, and yields are actually backing up a little bit, etc. Silver has been fascinating to watch as well. We've discussed this too. Frustrating it has for silver longs anyway that hasn't followed gold, and the ratio has gotten incredible in historic terms. Looks to me like, just as a basic round number, 15 looks really critical for us to maintain any sort of upside view here.
Yes, 15 and a half actually, and a little bit more.
That's the resistance, but I'm talking about for support. Yeah.
Oh yeah, support. Yeah, that's what I think. We will see a minor setback. The same with like the similar to the gold around 15, and then we should take off again. Yeah, the round numbers again. People like the round numbers for some odd reason.
And I think driving the consolidation of precious metals, some of the heat coming out of the bond rally in the U.S. So you got to have a chart here. This is the biggest setback, single-day setback yesterday in U.S. Treasuries. We've seen the 10-year reach the 2% round level, 30-year reaching the around 2.5% level. These are key. Bond traders look at round yield levels, so that's worth keeping in mind as we're looking ahead at data. I've drawn a vertical line here, trying to find data points that saw the acceleration to the downside. It's not always clear what the driver was immediately on any given day, but that one I did draw there was the PCE inflation day, where we saw a 0.1% miss in the PCE inflation release for the April figures that time around. We're getting that PCE release tomorrow. You'll note as well in that chart, some days later, about a week later, we saw that very, very ugly miss on the non-farm payrolls, and we actually consolidated a bit lower for a couple days off of that. So, there's no easy line you can draw from data releases to the reaction in the market. That's just to point that out. But do be aware that PCE could, of course, have a lot of impact if it misses once again for the May figures tomorrow. And with the general sort of backup in yields, risk appetite very strong. Hopes around G20. Iron ore prices in China continue to ratchet higher. That's Australia's largest export. We have a chart here of Aussie dollar, and it's pressing on the 70 level. There's a pretty heavy speculative short out there, so I would suspect if we get above 70, especially if there's some positive spin post the meeting, there could be a pretty material risk of a speculative squeeze in Aussie. And then again, with the backup in yields, you look to the Japanese yen, which is indeed very weak. So strong Aussie, but weak yen. So dollar yen is up, while Aussie dollar is also up. That means Aussie yen is really up. We have a chart here showing how we've come back above that 75 level. Again, look at the magnitude of that downdraft since the April highs. There's plenty of room for a consolidation without necessarily averting the trend there. I did notice we've seen an ugly series of Australian credit growth reports out month after month, marching lower and lower. I think this is a long-term concern, even though the short-term there is a potential for an Aussie squeeze higher. And just briefly, before we get to a couple more items, wanted to point out that showed this chart yesterday. It's the jobless claims in the blue here, and I've inverted that upside down, so as jobless claims go up, that blue line would go down. And then I put the U.S. consumer confidence, which is a monthly number, the overall data series, just to indicate we are at that low since back in late 2017. And yet this time around, again, we do not have a huge slide in equity markets impacting confidence. So for some reason, we have confidence coming in lower here. Normally that correlates with the quality of the labor market, and we've seen that in past cycles. So would expect for the jobless claims to begin to tick up and show signs of rolling over if indeed the U.S. economy is weakening. We haven't seen it materially just yet. We've seen the jobless claims sort of flattening out a bit at very, very low levels historically, but we haven't seen that picking up again, and something we'll watch for in the weekly numbers as a key indicator for U.S. recession. Couple of commodity markets I want to get to before we get to the calendar. Kim, we discussed this chart yesterday. Very interesting, the situation in coffee. It's been such a bear market for a long time, and things are heating up a bit to the upside.
Oh yeah, it has indeed. Breaking the 106 resistance, and I said 115 next maybe. There's a slight divergence on the RSI, so I think maybe we could see a little bit of a setback after this break, but there's not really much resistance before 115 as I see it. I don't know where you are.
What was the driver of the immediate move, the fundamental driver in coffee?
It has been the dollar once again.
The Brazilian real, you pointed out.
Yeah, the Brazilian real was hit the highest level in 3 months, and it was also going back to October when we had this 30% rally almost. Again, it was driven by BRL strength. Also due to the market was short at the time, and market short once again. So this is a typical short coming rally. As soon as the market stabilizes, we may see some sellers emerge because of the structure of the forward curve. But for now, it's definitely a technical break that's attracting some attention.
Yeah. And then there's been so much focus on the U.S. grains market. The price action has gone pretty quiet, but we have a big report coming up.
We have a acreage and stock report coming out tomorrow at 4 o'clock GMT, and I've just highlighted a couple of the numbers that we're looking for according to the surveys. If you look at the chart here, you can see this is the bottom left. We're going to publish that tomorrow, but generally these are the numbers, surveys compared to a year ago, and not surprisingly we're going to see stocks of something like soybeans being up by 53% because they simply can't get rid of it due to the trade war with China. But I think probably the most interesting one, which is the up-to-date, is the acreage. How much? It's the first proper estimates for how much acreage has been planted with corn, soybeans, and wheat this year. And if we're seeing any major divergence there, that could attract some attention. I just put in the wheat chart. It's once again banging on against these 460 up towards the 560 resistance area. We are seeing a heat wave in Europe, which is stressing the crop here, and also in the Americas. Yesterday in Canada, there were some reports out that the wheat crop is going to be smaller than expected. So that's just providing some additional wheat support.
Okay, key to see how the weather develops from here, certainly, especially for corn, I would suspect.
And I think we just talked about yesterday as well. That just very much important for corn because corn has been planted very late. They need a very late season now in order to get any kind of yield out. So that raises a question about what if we get any early frost.
Yeah.
So it's going to be this season is going to be tricky all the way through to the harvest.
And then it impacts potentially the supplies inventories going into next year when you could have a train wreck if that turns out to be.
Yeah.
So very key to watch there for global food supplies. Let's look at the macro calendar for today and for the rest of the week, that being tomorrow, since we're running out of week to work with here. We've got some Eurozone confidence surveys up, flash CPIs from Spain up very shortly, and from Germany later today. ECB don't think they have much room to do much. The US Q1 GDP revision, this is like the 5th revision, so I don't think there's going to be major impact there. Again, the weekly jobless claims, just I think it's worth noticing if it's an outlier to the upside. And then tomorrow is, and of course Saturday is the key stuff. We have that acreage report Ole mentioned. We have the PCE inflation data out of the US. We have the Eurozone overall, flash CPI tomorrow. And then on Saturday, we now have a time Trump and Xi are meeting. I believe it's at lunchtime on Saturday. So whatever comes out of that, of course, will have to be absorbed into the Monday reaction. One might consider if there are outcomes worth speculating on. I'm not sure we get much. I didn't mention it much earlier. There was this Trump announcing the so-called Plan B, which sounded like a threat to go ahead and slap tariffs on China for the full $300 billion. This was the threat to raise that to 25% tariffs on the $300 billion of goods. He's talked about he would lower that to 10%. So it's actually saying, well, I'm threatening tariffs, but it's going to be at a much lower rate. So in a way, it's less bad news than the downside risk might have been if there is no deal. I don't think there is going to be a deal. It may be a friendly put down arms, stop of escalation, I think is the best we can hope for. I think that the long-term, deeper situation here is not going to get changed. I don't think China will agree to a situation where it has an independent authority approving or disapproving of its behavior. So we could get some good near-term news in terms of a détente, if you will, but not necessarily a deal. I think the idea of a deal is a bit silly at this point. Ongoing negotiations, less escalation, maybe a positive spin around there, I think is the best we hope for around this meeting. We'll talk about that more tomorrow, and we'll be back tomorrow with the Saxo Bank Morning Call. Thanks for joining.